first, I turned very bullish actually first quarter of last year on China. I actually argued that back then China would outperform in period of nothingness, and then suddenly there was that sort of vague statement around stimulus, and that initial big pop came back in, and now this kind of deep sea infused rally that we've seen the last several weeks here. So it sounds controversial, but I don't really think it's controversial at all. And I'm saying this as an American. I think China's market is going to outperform the U.S. markets for the next 4 years, and I don't think it has anything to do with Trump. I think it has everything to do with starting valuation. I think it has everything to do with where people have put and allocated, over-allocated, under-allocated their capital. China has been not only a from an investment standpoint, dead money for a very long time, but it's also become a source of anxiety and risk for financial advisors to even consider taking a contrarian bet for their own clients, investing in China funds. So I'd argue there's tremendous underinvestment. I'd argue that because the valuations are so markedly different between the U.S. and China, sure, no disagreements around the concerns around China taking out entire industries, for example, and the rule of law not being abided to like it is in the U.S. But there's a price for everything, right? And I tend to be contrarian at heart. I think if you're going to do a spread trade or anything, going long China and short U.S. dollar for dollar could be a really interesting stat arb pairs trade to consider.
Wow. Wow. Okay. And, I mean, what we've already seen happening is at least some of that dead money that you talk about is actually starting to wake up, right? And the way I look at it, it's got mostly to do with local money, right? Local Chinese money has gone into a lot of different things, certainly not the property market, but into gold, into crypto, into dollar assets offshore, maybe even into Mag 7 stocks. I don't know. Right. But when conditions are right or rife at home, I think the hope is that all this money is going to start flowing back. And, we've talked for the last couple of days about this, divergence in valuations between A's at home in China and H's offshore in Hong Kong. When this money starts coming home, they're going to go into A's. And I think that's sort of the thinking that I've been tracking. Does that make sense to you?
Yeah, I think that, and I also think that, the further we get away from the lockdowns that China put on its own citizens, which were very extreme post-COVID, that becomes a distant memory, hopefully, for a lot of Chinese consumers. And to the extent that held back some of the animal spirits, the further you are in time from that, the more likely that those animal spirits, I think, will come back. So I do think there's a lot of potential for a big move in China's markets, and to your point, flow of funds. And believe me, for all the criticisms around China's markets and its uninvestable and all this stuff, everything's investable when the trend is up, period. I don't buy the argument at all that greed will not overtake concerns over equities if you have an up and to the right chart, right? I mean, that at the end of the day, that's going to matter more than any political ideology, more than anything else, is the thing going up.
And we're looking at the Chinese currency. These are H's, the offshore 2904 or thereabouts. The way things have been going recently, right? DeepSeek about a month plus ago, Xi Jinping meeting Jack Ma and embracing him, going, look, it's okay. You're welcome back to the fold. You're rehabilitated, et cetera. A lot of people are very positive about the change in sentiment and confidence, especially over the private sector and tech in China. These guys get back on board or allowed to be back on board, that would be very positive for the economy and would take a lot of pressure off the renminbi, don't you think?
Yes, and now there's other implication on that, which is that if that were to take place, you would think that commodities would start to pick up en masse overall, and more than just gold. You'll see a pickup in industrial activity also because there's a natural halo effect there. Copper probably starts to really work in a big way. All that could still mean you have another round of inflation down the line, right? Because of the cost push inflationary pressure that China could be the driver of from a commodity cycle perspective. And I myself am actually quite bullish on commodities, broadly speaking. But it's a question of the path through which that happens. I think you have more short-term disinflation, almost a potential deflation scare, globally that could take place. Slowdown dynamics look very real. Atlantic GDP expectations just went negative for the U.S. China then comes in maybe towards the tail end of that, and then that causes another reacceleration of inflation. I think that's very possible.